What up, Hyperchange? Welcome to another episode of Stocks 101. Today we're going to be talking about market crashes, recessions, and specifically what causes them, a word or phrase I like to use called black swan events. I've gotten a ton of requests to make an episode or, questions about, what happens when the market crashes. If the market crashes, I have this stock that I really want to buy, but I'm worried the market's going to crash. All these are interesting and valid concerns, especially given the fact that, the last big market crash we had was in 2008. On average, the stock market crashes about or pulls back or has a bear market about once every 7 or 8 years. So, given the last one was about a decade ago, it seems like we're way overdue to have a major market correction occur. So this has caused a ton of speculation about what might cause it and what will happen when that actually does. And so that's why I thought it would be a great time to make an episode sort of recapping, the stock market overall, what is a bear market, what can you expect when it happens, etc. So to start, let's define what is a bear market. This is a definition from Investopedia. A bear market is a condition in which security prices fall and widespread pessimism causes the stock market's downward spiral to be self-sustaining. Investors anticipate losses as pessimism and selling increases. Although figures vary, a downturn of 20% or more from a peak in multiple broad market indexes, such as the Dow Jones Industrial Average or Standard & Poor's 500 Index, over a 2-month period is considered an entry into a bear market. So really simply, a pullback of 20% or more within 2 months is the catalyst or entry point into a bear market. And even more broadly and simply, a bull market is when the stock market is going up, things are rising, everything's good, there's optimism, and things are soaring. Now, a bear market is the opposite of that when things are crashing. There's this never-ending pessimism and everything is going down in sort of this downward spiral. So the key there is the stock market is all about psychology. It's all about this expectation and mass market psychology about where the stock market's headed. Are we in a bull market? Are we in a bear market? And when that sentiment turns, we can lead to major market recessions and pullbacks. So what causes a sentiment to turn in a market? Why would we go from a bull market to a bear market? What catalyzes these recessions? Well, unlike you might think, it's not necessarily, something obvious, not something out there. It's what they like to call a black swan event. This is a definition from Wikipedia. The black swan theory, or theory of black swan events, is a metaphor that describes an event that comes as a surprise, has had a major effect, and is often inappropriately rationalized after the fact with the benefit of hindsight. The term is based on an ancient saying that presumed black swans did not exist, a saying that became reinterpreted to teach a different lesson after black swans were discovered in the wild. And so before we get into like, oh my God, this black swan event is going to occur, the market's going to crash, I'm going to lose everything and freak out, let's also remember one thing that I think is super simple. Here's a historical chart of the S&P 500, the broader index of the overall US stock market. As you can see, over time, it has gone up consistently, even past every single high that it hit during the 1999 bubble, during the 2007 bubble. It always goes to new highs in the long term. And these gray periods are recessions. As you can see, they happen, like I said, once every 7-8 years or so. It can vary widely. But the important takeaway from this chart is that it always goes up in the long term. And this is a huge reason why market, legends like Warren Buffett and Peter Lynch have, they stick to their gut. They have this philosophy that you should never try and time the market, never try and predict when a crash is about to occur, because it's basically impossible. Their whole philosophy is just buy great companies that you love, that you understand, and hold them for the long term. And through market cycles, through the ups and downs, you will do very, very well. And that is a philosophy that I abide by. And that's why, I buy Tesla stock when I think it's undervalued, and as much as I think, oh my God, we're in year 9 of a bull market, the recession's right around the corner, this is extremely overvalued, or like this is a, pricey growth stock that is leveraged to, luxury consumers who get hit really hard in the recession, et cetera, et cetera. It takes a lot of discipline to say, I'm not going to time the market. I'm not going to think that I'm smarter than everybody, and I'm just going to buy great businesses. And if a market crash happens and those businesses get cheaper and they go on sale, I'm just going to buy more and more of them. That's a gift. That's a blessing. That's not a disaster. And that's the philosophy that I have. And as you can see, here's the historical chart of the S&P 500 that shows that over, the last century, it's compounded at about 7%. On an annualized basis, and always goes higher than the last recession. And for those of you who are like, oh my gosh, Gally, but you're not accounting for inflation. Okay, here's the inflation adjusted chart, which will tell you pretty much the same picture. I like to use the non-inflation adjusted chart just to compare it to all other assets and then adjust for inflation later. So that's why, but I know some of you want the inflation adjusted chart, so here it is. So now let's briefly talk about the last 2 major market crashes or pullbacks or black swan events. So the last black swan event was in 2008, the Great Recession. And Here, I put it on the chart. And what's so interesting about this, as with all black swan events, in retrospect, it seems very easy to predict and to see, oh, of course that was going to happen. Of course the market was going to crash. Of course we're overvalued. And in 2008, the fundamental root cause of what happened in the stock market was that there was all these mortgages that were being packaged up and bundled, and they were bundled so many times that the risk was theoretically diversified because they had so many mortgages, but they were all super levered and they were all crappy properties. And eventually, when there was so much irrationality in the real estate market because of these collateralized mortgage products, that people got so excited and that nobody was digging deep into what mortgages they were buying, and everyone thought they were super diversified. But the second the real estate market started going down, they realized that every single housing price went down. They were all super levered to that housing price, and then it caused this fire asset sale where all these banks were trying to get rid of these diversified mortgage bonds that they held. And when there's a panic sale and the psychology turns, that's when the market crashes. And that's why, once again, it's all about psychology. And so the reason why I think it's so difficult to predict, and that's why it's such an interesting black swan event, and forgive my very brief explanation of the mortgage crisis and the Great Recession because it's so much more complicated than that and I didn't do it justice. But the point that I want to leave you with is you could have called that these houses were overpriced and that they weren't being, the risk wasn't being assessed correctly months or years before it actually happened. And if you watch The Big Short, the amazing movie that describes this, of like the one hedge fund manager who actually saw this coming, even he was years and years early on this trade and almost got forced out of the trade because he had to hold it for so long. So the point is, as long as it's irrational, there's always this weird, unexpected turn in psychology that actually causes the market to go down. But the last thing I want to point out about the '08 recession is that the worst thing you could have done during the 2008 recession is sell your stocks, is get out of the market, is panic. That's always the worst move because once again, it'll always go higher. Be greedy when others are fearful. Be fearful when others are greedy. That Warren Buffett saying should stick with you at all times. And I think that is just a perfect example. Now let's talk about the market crash before 2008, which occurred in 2001, the burst of the dot-com bubble. So here I've charted this with the Swan. And as you can see, once again, there was a huge pullback in the market that lasted a year or two. Eventually it bounces back. But the gist of the dot-com bubble is very the same as the mortgage crisis in a lot of ways, which was stocks were becoming incredibly irrationally overpriced. You heard all these stories about this company that just had a website, they had no sales, they were valued at billions of dollars, everybody was IPOing with the dot-com in their name, and they were, valued at these crazy, crazy multiples. But the thing is, this went on for years and years. So why did it happen at that one moment in 2000 or 2001 when it actually triggered the crash? It was all about the change in psychology. And I think you're kidding yourself if you can predict when that change in psychology will occur. So even though these things are irrational for so long, it's very hard to predict when that irrationality will come back. And even so, you might also be able to argue like how irrational really was it? Maybe the most irrational thing was that the market crashed, because since then we've gone, as you can see from this chart, way, way higher than the highs in the dot-com bubble. And a lot of those companies, sure, a ton went bankrupt, but a lot of the other companies that were formed during the dot-com bubble, like let's say Amazon, which is on its way to becoming the most valuable company in the world, in many ways the hype was early and people were too excited, but was the vision right? Were they right about Amazon's disruptive potential in the long term and how much the internet would change the world? In many ways, yes. And so I think there's always two sides to the story here. But once again, I just want to leave you with this thing that like the black swan event occurs, it's unpredictable, it's psychology, but the market always rebounds to all-time highs. This is where, of course, I've just said, you cannot predict the next recession. You're not going to know what the black swan event is. Try and ignore it. But because this is Hyperchange, it's my investing sort of diary and like we're having fun. Of course, I want to be wrong and predict the next recession and just put my guess out there. I'm probably going to be wrong. And this is my challenge to you, is to put your guess of the next recession in the comments because we'll just have fun with it. So what is my when do I think this will happen? What do I think is going to happen? So I think in the next year or two, there could be a recession. And once again, it's not like the world's going to end. It's just like the market will crash for a little. People will think the world's ending, but eventually everything will be fine. But what do I think is going to cause it? And before I put my slide up, I want to say uncertainty is the market's biggest enemy. This is usually what causes the black swan event. When there's something that happens that triggers uncertainty about what's going to happen next. Uncertainty is the market's biggest enemy. And so whenever you have an event that creates a huge amount of uncertainty, that creates volatility in the markets, that creates a market crash. So before I play this slide, I don't want to get political with this. I refrain from commenting on politics at all just because it's just a heated discussion I don't want to get into. But from the economic side, this is what I think could trigger the black swan event. It's just my guess, is this. Robert Mueller's investigation of the Trump administration, of the Russia investigation. I'm sure you have all heard of it in the news. Whether you agree with it or not, Republican, Democrat, whatever side you're on, my theory is that, there's been a lot happening behind the scenes, and the Mueller investigation is going to come out with some big accusation or big report, or whether you believe it or not, whether it's true or not, that's a totally different debate. But the point is, when that comes out, it will create panic and, what even more than that, uncertainty. It will create a huge amount of uncertainty about what's happening next in government. It'll escalate these bipartisan tensions that we've been seeing that are just escalating and rising and rising. I think that's all going to get worse. I think that's about to culminate when when Mueller drops whatever he's been working on, if there even is something to drop. So this is just my total guess. I'm not an expert on politics. I'm not an expert on any of this, but I just have a gut feeling that this bipartisan tension, this Mueller report, it's all going to culminate in some very big event that is going to lead to a lot of uncertainty. But who cares? Because it's all good. Just don't panic. Once again, this is the chart of the S&P 500. How many black swan events have we had in history? How many times have we seen a market crash where everything everybody says is going to zero and everything, the world's ending? This happens all the time. And what happens all the time, every single time after a black swan event? The market goes to new highs. We always surpass it. And you might be like, why? Why does this happen? Well, check this out. Inflation adjusted, for all those inflation adjusted people out there, the inflation adjusted earnings of the S&P 500. How I'm always talking about like earnings power, how much money can this asset make? That's the bedrock of value for any asset. And so the bedrock of value for the S&P 500 is its earnings. And as you can see, over the past, more than 100 years, they always go up, inflation adjusted. And this is the fundamental driver that will always drive the market to new highs. So as long as the economy is growing and the GDP is growing and the world and the US specifically are becoming more productive and growing as an economy, the stock market is going to grow as well. And in the long term, over the past 100 plus years, we've proven that we just consistently grow at this rate, and the stock market follows that trajectory of growth. And that is why over the long run, it compounds at 7%. And I think it's an amazing way and place to put your capital, because it's just a way to bet on the growth of the US economy, which for over 100 years has been growing inflation adjusted earnings. And so that is why the backbone of the market is strong. And that's why I wanted to make this episode, because I think people, they spend all their time trying to predict the market crashes and what's going to happen, when I just think the greats, Warren Buffett, Peter Lynch, I think they have the best approach. It doesn't matter. Think long term. Invest through market cycles. A lot of you are probably really, really young. I'm only 25. If I want to invest for the next 50 years, major recession occurs, great. I will be loading up the truck on Tesla. I will be doing everything I can to get more shares of my favorite companies at cheaper prices. That's a blessing, not a disaster. And so I think that's the mentality you need to have. That's the mentality I have for markets. Is my 2 cents on market crashes, pullbacks, recessions. They're going to happen like clockwork, but in the long run, the market always goes up. And all those people who are always like, oh, the market's going to crash, etc., a broken clock is right twice per day. All these doomsayers and naysayers they've always been wrong, and they're going to say they're right when the market's crashing, but they're not going to be there when we go back up. Anyway, this is Hyperchange. This is Stocks 101. Would love to know what you think the next black swan event is going to be that's going to trigger the next market crash or recession. Also, huge shout out to our Patreons, supporters, producers. Thank you so much for supporting the channel. Anyway, I'll see you guys next time. Peace.